David Bloom. He is Global Head of Currency Strategy at HSBC. David, how do you explain what's happening in currency markets? What is so safe about the Japanese yen or the Swiss franc when you consider the economies of these countries? They're nothing to get excited about.
Well, they're net savers, and we need net savers. They're not net debtors, and the rest of the world is massively in debt. We don't want to own currencies of massively indebted countries. We want net savers of the world, people who've got capital. Just remember, it's like a home, these currencies. You might be living in a place you really don't like, and you move to a better place. Doesn't mean it's good, but it was better than the last one. And that's like these currencies. You don't want dollars, you don't want sterling, you don't want euros. So in a sense, you're forced into them. They're not great, but they're better than the last one.
Are there other alternatives? How about the Aussie dollar?
No, don't say that to me. Not a chance. That's a net debtor in terms of saving. Its banking system is somewhat troublesome in some respects. I rather prefer Norway, Sweden even. These are much better plays, and Norway is fantastic. Current account surplus, budget surplus, oil, everything you could possibly ask for in this world. A beautiful currency.
Norway and Sweden. What about the move that we've seen away from stocks and into treasuries? How do you explain that? Is that really concern about the growth outlook here, or
Yes.
is it just a reaction to the fact that we've now got that debt deal?
Well, it seems that in FX we can only concentrate on one thing at a time. And now that the debt deal's done, we're looking back and we're seeing, oh yes, I remember it was only about less than 20,000 on the payrolls. The PMI fell, the Australian PMI collapsed, the South African PMI collapsed, the world growth's looking very ropey, China's slowing. Let's concentrate on that. And suddenly everyone's moving out of equities into fixed income. And even as we've seen during the debt crisis, that's not a beautiful place to be either.
Is that the right assessment, though, David Bloom? We had Martin Feldstein saying there's a 50% chance that the U.S. could slip back into recession. Where do you see the chances?
Yes, I mean, we've just downgraded our growth forecasts, the revisions, which in all this noise, people didn't get that during the downturn, the revisions to the U.S. economy were dreadful. They were substantial. They got no airtime, and that the U.S. economy is in a much worse position than we thought it was. But the point is the fiscal routes are closed. So if an economy needs to be stimulated, you've got to go down the monetary route. If you go down the monetary route, your currency will get punished.
David,
and they're already talking about QE in the UK, QE in the US, monetary stimulus perhaps in the Eurozone. Not good for these currencies.
are you betting on QE3 in the U.S., and what's that going to do to currencies?
Well, what I'm saying is that the fiscal door is slammed shut now, and if there's any stimulation, it can only come from QE3. And this is where the markets are getting their head around, and that would be terrible for the dollar.
All right, let's hone in on where we make money. You mentioned Norway earlier and the Swedish currencies. Tell us more about your top trades here going forward.
Well, one of our top trade at the moment is to be short Euro Norway. We think NOK, as we call it, is absolutely a superb currency. The markets ignored it. We compared it to the Swiss franc, and we think it beats the Swiss franc on every single ground that there is. So we much prefer it. It's not as overvalued, it's not as crowded, and it's got much better financials in terms of current account surplus, budget surplus. It's got oil. It's a thing of beauty, Norway. The market just doesn't recognize it, so I'm trying to point it out to them. And I think it's a great currency, and that's one of my best plays at the moment.
And you clearly see more trouble ahead for the euro. Are you anticipating more weakness there, perhaps bailouts for other countries coming up here?
Well, the problem is that we were on the debt ceiling. Everyone's talking about it. We've been talking about it for 10 days. Yesterday morning, basically, we woke up and everyone's worried about Europe. Everyone's talking about Italian bond spreads. We're just lurching from a rotating sovereign crisis from one country to the other. So is the situation in Europe over? No. Is the situation in the US over? No. And we've got the UK as well, 0.2 GDP growth after 0% rates and QE. There was talk on the shadow committee that more QE is needed. So these three ugly currencies is what we want to get out of, and that puts us into NOK, it puts us into emerging markets, it puts us into anything but the ugly three.
David Bloom, thanks so much for your insight.